There's been a lot of confusion in the metaverse over the last couple of days. And unfortunately, this confusion has created a lot of division. The question I want to ask is, why? What is the reason to argue and say one person is wrong and the other person is whatever choice words you choose? Unfortunately, the division is being created by something none of us can control, none of us have created, and from what I can tell, no one really knows anything about. We are all trying to do our best to get answers out there. And rather than helping each other, we are arguing and fighting. A lot of people I see that are the most upset in my comments and on social media are people I have never even seen before. So why be mad at the people who are putting in the work, the extra late sleepless nights, and taking precious time away from their families to try and explain things to you for free? I can only assume how frustrated everyone is, and believe me, I'm very frustrated too. So rather than being frustrated, on Thursday, I made an email request to Metamaterials on their site. Friday, I got a call back. Unfortunately, I was at work, so I scheduled a call back for later in the evening. Around 8:30, 9 o'clock, my time, I got my call. The person I spoke with was able to inform me that Meta has nothing to do with this Mmtlp ticker switchover to the OTC situation. And this is in no way your dividend. If it was the dividend, first there would be a press release that the asset sold. And then you would see a filing depicting the breakdown of the asset sales and total dividend amount after all obligations were fulfilled. And we have not seen that at all. I was also able to confirm that if people sell their preferred A shares back to the market, no matter what market it is, they will not be able to receive their dividends because you would ultimately be forfeiting your right to the dividend since you just sold your placeholder for it. Now, beyond that, they could not elaborate on anything else, as they have nothing to do with the situation and know nothing about the OTC market structure, as they are listed on the NASDAQ. So, I was not satisfied, and I spent the last 2 days digging through the internet trying to get you answers. Now, this might get confusing, so I will try and explain as I go. And I'm very sorry ahead of time for the length on this video, but don't go away. This is all very important.
What's up, YouTube? My name is Uncle Smokey, and this is Uncle Smokey's Stock Trades. And before I start this video, I would like to say I am not a financial advisor, and this is not financial advice. So please take what I say with a grain of salt and do your own DD.
Alright guys, so where we need to begin first and foremost is the preferred shares held in street name. So a while back, George came out with this message that there was a confirmation on how many preferred Series A dividend shares were. It was roughly 165 million shares. And he also had said that they were held in street name. Now, we have been covering this on my channel and on Sterling's channel since that post was put up. And as we know, being held in street name means a security is held in street name when a brokerage holds it on behalf of a client. The name that appears on the stock or bond certificate is that of the broker, but the person who paid for the security retains ownership rights, which right there tells you that if you sell that security, that you will lose your rights. But they own the bond certificate, which means they can do with it as they please. Just because you own the rights doesn't mean they can't play with it. And as long as you hold on to your preferred shares that you originally got, then they are required, because you have the right to that share, they are required to pay you your dividend. So that's very important. You always have to remember, just because they own the physical bond doesn't mean that they are selling away your rights. You still have your rights no matter what, okay? You own the stock, you own the preferred share, you have the right, unless you sell it off. So just keep that in mind throughout this entire video. As long as you don't sell your original preferred share, you have the right to those preferred shares. Now, I am not going to say that you have the right to get additional preferred shares. First and foremost, That wouldn't be fair to the people who actually went through the procedures of getting their shares. So I'm not going to say that buying these new MMTLP shares, whether it's on your current broker or on a different broker, will ensure you the right to get those preferred shares. So just keep that in mind. They may be nothing at all. This could all dispose at any moment. So, all right, so we're going to move on to the next topic. All right, so here's the next thing we're going to talk about. How is it possible for a company to get listed onto the OTC, the on over-the-counter market? The first thing you need to know about is the OTC Bulletin Board, or the Over-the-Counter Bulletin Board. It is an inter-dealer quotation system that is used by subscribing FINRA members to reflect market-making interest in OTC BB eligible securities. Subscribing market makers can utilize the OTC BB to enter, update, and display their proprietary quotations in individual securities on a real-time basis. So what it's telling you is the OTC Bulletin Board is basically the place where they list it. And I actually do have a picture of it right here. And you'll notice that it says 10/6 of 2021. There was an edition. All right, so this was an edition of MMTLP on the other OTCs. The other. That's not the two good ones that are regulated, which we're going to get to here right now. So the next thing we're going to talk about is the OTC Link LLC. So this is basically the third-party dealer, the one who gives the information out. So OTC Link LLC is owned by OTC Markets Group Inc., which is basically where we'll see here in the future of the video a picture of the physical filing for the OTC. Anyway, so the OTC Market Group Inc., which operates OTC Link ATS, an alternative trading system, an electronic interdealer quotation system that displays quotes from broker-dealers for many over-the-counter securities. Many. Market makers and other broker-dealers who buy and sell OTC securities can use OTC Link ATS to publish their bid and ask quotation prices. So this is where you would see the bid and ask, right? Right. This is basically, like I said, the third-party vendor that we use on our markets. I'm not saying it's the same one. All right, so OTC Link LLC is an SEC-registered and FINRA member broker-dealer. So they are registered with the SEC and they're a FINRA member. Companies quoted on OTC markets, OTCQX, this is the first one of those brokers, or those markets, and OTCQB, which is the other one of those markets, are required to provide key financial information and be current in their disclosure. All right, so keep that in mind, that those two markets are the fancy ones. They're the ones that when a stock is getting ready to get listed onto the NASDAQ, that's what they're at. And if a stock gets delisted from the NASDAQ, that's where they're at. Okay, this is the top of the line when it comes to OTCs. All right. These two markets include a range of companies from large global companies that have primary listing on a foreign exchange to U.S. community banks, as well as venture stage companies and those that are small, closely held, and or thinly traded companies or thinly traded, period. Companies on OTC markets, groups pink markets, are not required to meet any minimum standard. This is coming directly from the SEC.gov website. They are not required to meet any minimum standard. Many of these companies do not file periodic reports or audited financial statements with the SEC, making it very difficult for investors to find current, reliable information about those companies. Investors should take extra care to thoroughly research any pink company that does not provide current information. Broker-dealers are required by Rule 15C2-11 under the 1934 Act to have some information about the issuer. Some. Okay? Keep all of these keywords in mind. Check the company profile at otcmarkets.com to see if public information is available. And we will be doing that here shortly in the video, so keep all of this in mind. So securities that are listed on the board are not ones that are traded on the NASDAQ or any other securities exchange. Therefore, a company is not listed on the board, it is just quoted. Although companies must adhere to certain listing standards to maintain their listing on the major exchanges, companies issuing OTC securities do not have to meet these standards. The only stipulation the OTCBB has identified is that any company that has an OTC security quoted on the board must not be delinquent in its filings to the SEC. Now, how OTC securities are traded. Before a company can post a quote for its OTC security, it must first recruit a market maker to sponsor the issue. Only market makers are allowed to apply to have a quote listed on the board, and only one market maker is needed per security issue. Since the securities are technically not listed on the OTCBB, the issuing company does not have to pay any fees to its shares quoted. Market makers, however, must pay a fee of $6 per security per month for all of the securities that they have quoted on the board. Under NASD rules, market makers are not eligible to receive any payment for issuing shares of the companies they sponsor. Instead, market makers make money on the spread between the bid and the ask price that they quote on the board. All right, so what this is basically telling us is there's no severe regulation for them to be put on there. And it only takes a market maker. Okay, so that brings us to this part. So the other day, John Brutta put on Twitter, the Mmtlp profile is all from 2012. This smells like something nefarious from people who are not good people. I will get to the bottom of this as they are using my information in error as well. And he put a link up here. This is the otcmarkets.com. This is basically where you go. And I've been learning this as I go. So I went ahead and put it up there. And here's what it is. So as you can see on the screen, there's just a lot of information here. So it starts off with a lot of information. Mmtlp, Metamaterials Inc., that's there. Okay, Class N preferred stock. So it's showing that it is that. But look down here. The president of the company is John Brutta? No. Tom Lipinski is the CEO? No. Where's George in this at all? It's also saying that the address is in Canada, but the website's Torchlight Energy. A lot of this information is incorrect. And it doesn't have to be absolutely correct. It just has to be able to be entered in and accepted by the board. And again, you just need a market maker to sponsor you, to make this doable. So we've already got a lot of false information right here. Now, if you keep going into this, you'll find the financials are also not right. And you can just click across the tabs on the top to be able to do that yourself. These financials don't match up with anything Meta. So why would they use the metamaterials address, referring to it as metamaterials, and then use all of this Torchlight stuff if it was metamaterials? It's not. It's not Meta. And this is proof right here. They would continue using the metamaterials.com website. They would use their phone number. George would be listed as the CEO. It would be all of that. Okay, it would be all accurate information if that's what it was, because it has to be, because it has to be able to be confirmed through the SEC. All right, so now let's get into the next part of this. So I've been hearing this whole rule about this SEC rule 15C2-11. Now, you're going to notice here on this blog that I'm posting up, there's a nice little write-up on that. Many private companies that go public are opting for the listing on the OTC market's OTC Pinks due to the increased costs and more stringent regulations associated with Securities and Exchange Commission reporting. Rule 15C2-11 of the Securities Exchange Act of 1934, which was recently changed and updated, can be used by private companies seeking to go public without an SEC registration statement by a sponsoring market maker submitting a Form 211 with the FINRA. FINRA. So basically what that says is they can bypass a lot of regulations just by having their sponsoring market maker file just this form stating that it's all accurate, and boom, there it goes. This enables the company to be quoted on the OTC market's pink sheets quotation system. In order to go public in this manner, the private company must meet certain requirements discussed below. The pink sheets offers several listing options and provides a method for companies to comply with an adequate public information requirement of this. It provides a method for companies to comply. Okay? It provides this method for you with an adequate public information requirement of this rule without filing reports with the SEC. They do not need to file these reports with the SEC. Providing the information required by this rule enables market makers to publish quotes in a company's security. The OTC Markets Group operates an electronic interdealer quotation system called the OTC Link. Okay, so this is their link up, which broker dealers use to trade securities not listed on the NSRE, the National Securities Related Exchange. The OTC market categorizes users in tiers based upon level of disclosure of the company provides. As discussed below, companies who will go public using Form 211 qualify for the OTC Pink Current Information tier. The Pink Current Information tier is available to issuers who do not file reports with the SEC, but voluntarily provide specific disclosures required by OTC markets. Here is your requirements. This is very easy. We're getting close to where I wanted to be. In general, a private company can go public if the private company has at least 25 non-affiliate shareholders who paid cash consideration for their shares at least 12 months prior to the Form 211 filing date. So, the only thing that had to happen was whoever held the shares had to hold them for a year, they had to pay cash, and it had to be before this. Torchlight was around for a very long time. They just had to hold their shares through the merger. I mean, as long as they've had them for a year, which we're already a few months past the merger, that was easy. All right. Next, the private company must have at least 1 million shares outstanding. 1 million is all it needs. Of which at least 250,000 are free for trading shares. Now, we're getting to a very familiar number. This is a number I've seen recently. The private company must never have been a shell company. Okay. And the private company has current public information available. Okay, so if you look at that last thing we had just showed, I'll pop it right back up. It is not a shell company. They listed it as not a shell company. Okay, the private company has current public information available. Well, it's got public information available. It says a current date, even though John Breda confirms that it's not current, and it is his old information, but it only has to say it is. It's not confirmed. This is all new stuff. All right. So, and then you've got this little section here. In order to use rule blah, 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 the private company must locate a sponsoring market maker to submit Form 211 application to FINRA on its behalf. FINRA may render comments to the Form 211 application, which the sponsoring market maker and private company must respond to. Once FINRA has satisfied the disclosures, satisfied the requirements of this rule, it will assign a trading symbol, and the market maker can quote the company's security. Once this occurs, the security of the private company going public are quoted by the OTC markets on the OTC pink sheets. Once the sponsoring market maker has published quotations for the company's securities for at least 30 days, another market maker can publish quotations for the security. So they only had to have them for at least 30 days. And the other thing we need to talk about is the expert market, where this rule doesn't apply at all. This actually hides this from everybody. The 15C2-11 actually hides the expert market or the gray market from the general retail public's eyes. You can't see it. It is the dark pool of the OTC. And as long as they have been able to clear their requirements for 30 days, other market makers can publish quotations for the securities. Well, what do you know? So here's a great description of what the expert market is, or what used to be called the gray market. The SEC amendments to Rule 15C2-11 go into effect on September 28, 2021, which was just the other day, and will effectively eliminate public broker-dealer quoting in securities of issuers that do not make current information publicly available, giving effect to the SEC's stated goals of encouraging public companies' disclosure. OTC market groups will use Expert Market as a venue of broker-dealers to publish unsolicited quotes representing customer limit orders in no information securities. That's what we have, a no information security. There was virtually nothing there other than an address, some names, and things like that. There was really nothing good. No QSIP, no anything. OTC market groups currently operates the expert market as a distinct market tier for a small number of companies. However, on the 28th, this market tier will expand to include a broader range of securities. All right, so all of this stuff really is irrelevant to what I'm trying to get at. What I want to show you is who can access the expert market, showing you what I mean by there, the dark pool. Quotations in expert market securities are restricted from public viewing. Only broker dealers and professional or sophisticated investors are permitted to view quotations in expert market securities. Despite the restrictions on who can view quotations, the expert market does not impose restrictions on who can trade securities. This rule governs a broker's ability to submit, publish, or distribute quotations, bids, and offers in OTC securities. The rule does not apply to the underlying transactions or ability of an investor to buy or sell a security. All right, so right there, it tells you it's the dark pool. We can't see it. Only the sophisticated guys can. Only the smart money, the big shots, the broker dealers, the market makers, those things. So right there, it's just showing it's another way for the hedge funds and the market makers to take advantage of the retail investors and have another platform for them to trade. And it also says we don't know how long this has been going on in the expert market. We just don't know. Now, with that being said, let's take a look at this. So again, we're going to visit the SEC website, sec.gov, because this is basically the best place you want to find any kind of rule, any kind of information on anything to do with the stock market, the American Stock Exchange. So all of this is basically telling you what the new amendment is to the 15C2-11 rule. And there's a lot here. And I'll tell you what, it does say that there's a lot of things that are going to be changing that will really help the retail investor as far as the transparency of the OTC market. But what I do want to point out is right down here below the fact sheet, and please, I encourage everybody to go to this. You could even just Google it, 15C2-11. It'll take you right to it. You can. I encourage you guys to read all of this. It talks about what it does, what it changes, the piggyback exception, and how it updated it, all of those things. But the one thing that nobody has seemed to point out is the rule will become effective 60 days following publication of the amendments in the Federal Register. The rule will have a general compliance date that is 9 months after the effective date, as well as a compliance date that is 2 years after the effective date, regarding provisions to require an issuer's financial information for the last 2 fiscal years to be current and publicly available. So everything that we have just covered that I know people were going to try and debunk and say, no, there was a rule that changed it. Guess what, guys? That rule is not into effect yet. Because if you go over here to the interactive brokers, right here on September 28th, 2021, amendments to Exchange Act Rule 15C2-11 became effective. The effective date was just the other day. That means these guys have 60 days following the publication of the amendments in the Federal Register. This was all rushed for a reason, guys. All of this was pushed through for a reason, because now they're going to have to start validating who they are, their financials, all of those things. And they're going to have to start doing it here in the next 60 days. And there's going to be a 9-month compliance after that. So, of course, there's still a long time to go. But I really don't think that it's going to take that long because there's been a lot of eyes put on it. And I think after this video, there's going to be a lot more eyes on it because I'm basically blowing it up, guys, right here, right now. You can clearly see that there's some hinky shit going on. So obviously, with this thing just starting to kick into effect, they felt rushed and they rushed it in. And I am exposing it. So let's just keep moving on to the best part of the video yet. All right, so here we go. Let's start down the major skeptical rabbit hole. Put your tinfoil hats on, guys, because this is going to be a ride. This is where I think everything has come from. Now, of course, this is all speculation. I don't know if this is 100% true, But with everything I've led up to, I absolutely believe it to be true. So, if you remember, on September 1st, I believe it was, Oilco Holdings Inc. popped up on our radar. This company had just opened up an initial listing a couple days ahead of that, and it was a brand new company, right? And if you looked at the information that we had seen, the agent was Corporate Creation Networks Inc. And we had automatically assumed that this was either going to be A, a spinoff, or B, the beginning of our dividends. Now, the one thing we didn't take into consideration, well, two things we didn't take into consideration is, number one, we already have an agent for that. And why in the heck would we use Corporate Creation Networks Inc. for that when we already have an agent? And it's not them. And the second thing we didn't look at or take into consideration was, well, here in America, whenever we file anything legal, whether it be something at a bank, a document that needs to go to the government, the startup of a company, things like that, we put our full legal name on it. Now, I understand George is in Canada, and he goes by George, and that's all well and good. But the problem is that's not his full legal name. His name is Georgios. And if you look down here, this is claiming to be a legitimate document, and here in a second I'm going to show you another legitimate document that states that George Palikaris is the president of this new Oilco Holdings. Well, if you look at any of these SEC documents that I'm posting up right now, look at the name on there. It definitely doesn't say George. It says Georgios. The second thing you also need to take into consideration is everything that has his name on it also says Metamaterials Inc. or Lambda Guard. That's not on this either. Now, the next thing you want to take a look at is this. This is the Silver Flume, Nevada's business portal. Now, Nevada is probably the easiest state to get a company license in. They take very little information to get it, and all you are basically required is to have a company name, go down to the courthouse, I believe, and get a ID number, and you can become a company. Hell, I'm pretty sure prostitution's legal over there, and they pay taxes on it. So that's a company. Pretty easy to get a gig out there, right? Now, this one here is showing that the Corporate Creation Networks, Inc., which I've dug into them a little bit, and you can go to their website. They are startup funds, they're agents, they do mergers, they do all kinds of things, all kinds of legal proceedings. And anyway, that's not for this video. The one thing you want to take notice of is right down here. At the very bottom here, it shows a couple of things we've been talking about. First and foremost, President George Palikaris, showing this to be his address. Now, we all know that his address is really in Canada, not in Texas, okay? And I understand that there's an office in Texas and yada, 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 but his address is Mmtlp in Dartmouth, Canada. It's what's on everything. That's the company, okay? And if it had to do with Torchlight, then it would have said that over here, okay? It wouldn't beat around the bush. It would be right out in the open. On top of that, we know that we would see an SEC document stating it if it were that. Now, the next thing we need to talk about is right down here. Look at the shares it shows that they have. So we had talked about the requirements to be on the pinks, and 1 million shares available is all that's required. But and there's 250 million here with 25 million preferred shares. Now, that's the next thing we need to look at. 250 million shares? Really? That would be the entire float of Meta with the preferred shares there. And we know that there's only 165 million of the preferred stock shares. So this right here does not make absolutely any sense at all. How this could be Meta. But what it also indicates is they're meeting the requirements for being on pink sheets, okay? And we know the pink sheets, they really don't require much at all to get on. As long as you have these simple filings that we've seen just now, you can get on the pink sheets. You can start trading. And my assumption is that's what's happening. We know that Fidelity was the first company to allow for it to trade. Fidelity allows for OTC trading on all of the major OTC markets, all three, including the pinks. We also know that it only takes a market maker to be listed into the OTC. We also know that all of the, or not all of, but most of the shares are held in street name, which means we don't physically hold the share. We hold the right to the share. But we don't hold the share. Somebody else holds the share. They hold the bond to the share. So that means all it takes is for a person or a group of people to start a company through any state to be listed onto an American OTC platform, as long as they have the backing of a market maker. Could have been any of the big ones, Virtue, Citadel. I mean, we can keep naming them, but I don't think we need to. And it also states that all they had to do is have 1 million shares of an underlying asset to be traded. It doesn't matter what the asset is. They just need to have the bond for it. All right, so let's lay it all out now. We've got market maker and hedge funds that go ahead and they own the bonds for our preferred shares, which means they own the note. They own what can physically be traded. They've taken those and they've put them on the OTC. And because they've done that, they created a ticker that attached the ticker to those shares. Those shares exist. They have no value to them, but they exist. And as soon as they put them on the OTC, they attached a value to them. And with that, when it opened up onto the OTC, and the reason why nobody else could trade it is because Fidelity is the one who started it. They're the ones who recognized it. Now, just like our market, they all go through a third-party vendor. And because Fidelity is the one who first allowed it, and they're a very large brokerage, huge, monstrous brokerage, then the third-party vendor then took that data and moved it across the airwaves, and then it moved on to the other brokerages. Now, the reason why Robinhood and Webull didn't take on initially is because they don't trade OTC, and they can't trade OTC. Robinhood's not allowed to, and Webull just doesn't. Now, with that being said, that means that they're taking genuine shares, your genuine preferred stock shares, as the bond, and they are attempting to sell them to you. They're attempting to sell them to you on the OTC pink market because it is still, to this day, basically unregulated. And they're trying to get you to sell them back to them at a lower cost, because there may very well be a value to that land coming up. And if they think that this land is going to be more valuable than it was when this initially happened, they're going to be trying to exit their positions any way possible. And by doing that, they're going to want to sell you a share that you already own the right to, so that way when it runs up, way up off of FOMO, because everybody thinks this is the OSTK stock situation, and they're betting on that. They're counting on that. They want you to think this is a crypto dividend like OSTK put out, and they want you to buy it, and they want you to run it up as high as you think it'll go, and then they want you to sell it. And they're going to pull the rug out from underneath you. They are pumping and dumping this ticker to get you to sell your rights to your preferred shares so they don't have to pay you the dividend. The hedge funds and the market makers have colluded. They have come together to figure this out. Now, again, this is all skeptical. I cannot prove it, but I'll be willing to freaking bet it's true. We already know that Citadel lied. We already know that they like to play crap games. We already know that these hedge funds like to take away the sell button and the buy button. We already know these things. So, why was there a purpose for us to be arguing? There wasn't one. We just needed to wait for the two guys that come out with the best freaking DD on the planet to come out and show you what the hell is what's what. And that is what I got for you. If you can follow that street map, then you are going to be set. Don't sell your damn shares. Stop buying those pieces of shit, because here in a couple days, you don't know if they will exist. And there's no guarantee that those will pay you a dividend. Stop selling your dividend. That's not it. It'll be deposited as a cash drop in your account. And if it doesn't, after the beginning of the year, it will become a spin-off, okay? We're not there yet. Meta will let you know when we're there. This is not it. Stop being stupid, guys. Stop fighting with each other. Listen to Uncle Smokey. I know what's up. Peace.